This is what happened when Adam tried to teach himself to golf. When he tried to teach himself kung fu. And when he tried to teach himself to cook. Careful, babe. So when Adam wanted to learn a tap dance, he decided to mirror an expert. That's why when it comes to learning to invest in the stock market, Adam uses the new Mirror Learn and Trade platform on Bursa Marketplace. He just needs to register, choose from a selection of analysts to mirror, learn how they manage and strategize their portfolio, and mirror. With 100,000 virtual ringgit. Sign up on bursamarketplace.com. And just like Adam, you can start your investment journey today.
Hello, everybody. Welcome to How to Profit from Melt Up, the final leg up in the US bull market. Okay, this webinar is brought to you by Kenanga Investment Bank, supported by Wealthford International, and also in collaboration with Bursa Malaysia. Today, we are very excited to have you back here with us to learn from our speaker today on what is his outlook for the US market. We have invited a very renowned speaker, Mr. Derrick Tan from Singapore, to share with you this topic. And we had, if I'm not mistaken, we had Derrick back in March or April, where he first shared about the US market during the pandemic crisis, and his prediction has been pretty, and his forecast has been pretty close. Okay, pretty accurate in that sense. Today we are honored to have him back to share with us his outlook for the US market. Now, before we proceed, just want to share with you that this is very important slide, which is whatever the speaker presented is only for educational purpose. In no way that we give any buy or sell signal to any company that we cover in this webinar, in the events that we do. If you decide to buy or sell any companies, you do it at your own risk. Is that okay? So this is a disclaimer. Now, for this Kentrade webinar in Q3 2020, we still have 2 more webinars in store for you in the remaining of this quarter, which is happening in the month of September next month. So on the 8th, we have this webinar, The Worst is Over or More to Come, by Mr. Ui Kok Hua. And then on 24th of September, we have this FMB Stocks Power Talk by this speaker, Ian Tai. So if you want to learn more about this outlook, okay, join our Kentrade webinar. Just reserve your date on 8th of September and 24th of September for this Kentrade webinars. Now, it gives me great honor to introduce you the speaker for today. He is none other than Derrick Tan from Singapore. Derrick is the founder of Timing and You program, dedicated to raise awareness of the looming sovereign debt crisis, guiding individuals to survive and profit from the devastating financial crisis through the period of 2015 to 2022. He has been an active trader and investor in the stock, commodities, currencies, bonds, and property market since 1999. Apart from fundamental analysis and technical analysis, he is also a practitioner of the relatively unknown but amazingly accurate cycle analysis to improve the probability of winning in different investment asset classes. Now, Derrick has developed a proprietary 3-dimensional Timing and You relative risk index, which is probably the first of its kind in the world that combines cycle analysis, technical analysis, and fundamental analysis parameters to give a holistic risk-reward assessment of the US stock market. Derrick is also the 2019 World Excellent Young Leader awarded by the prestigious Yazhou Zhoukan for his vision, courage, and influence to drive positive change and be a force for good in the world. So he has been featured in numerous media in Singapore, Malaysia, and Indonesia. So without further ado, let me hand it over to you, Derrick.
All right.
I'm making you a presenter right now.
Okay. Thank
All
you,
right, you
Shane.
can
So,
turn on your webcam so we can see you.
all right, give me a minute. Can you guys see me?
Yes.
All right, good. So let me share my slides. Do I need to click? Oh, wait.
Yeah, just now we were at your side. Now we are seeing your desktop.
Oh, okay. So now looking at my slides.
Correct. You have to click full screen.
Okay,
Then all set.
all right,
Okay,
good.
awesome.
All right, so good evening, ladies and gentlemen. Great to be back here again. The last time I was doing a webinar with Shane and together with Kentrade was on the 16th of April. So 4 months has passed, and it seems that what I've talked about, especially the US stock market, has materialized. So probably today is a chance for us to look at what I've talked and probably look at what is going to happen next. Because from the title, you can see how to profit from a melt up. I do see that we're probably going to have a melt up, but we are into a final leg of the US bull market. And ladies and gentlemen, when this happened, I just want to say when US bull market, what US market does is going to impact the global stock market. So if US bull market, if it's really going to a melt up, I think this bullishness will rub into the global stock market, and it will include Malaysia stock market as well. All right. So okay, so Sean already introduced a bit about myself. So yes, I'm a Singaporean, and something to add on is I've been trading the market for the last 21 years. So I'm not an amateur. So I went through several cycles of bull and bear, and this is probably I have some experience and knowledge to share with you guys what probably may be coming as we head into 2021, 2022. All right. So of course, I'm founder of the Timing and You program. I'm also known as Mr. Cycle or Cycle Engineer. Why? Because for me, I specialize in this form of analysis called cycle analysis. Probably in this region, I would say I cannot say I'm the only one. Probably I'm the very, very few who speak or train about cycle analysis in this region, because I actually went to US and Europe to learn about CA or cycle analysis and bring it back to this region. All right. So now, ladies and gentlemen, what is CA? It's actually a field of study in analyzing recurring pattern and periodic repetition so that we can do forecast and forecast timing and turning points of different investment asset classes. Let me give you an example. Every day in our life, we are so-called encountering cycles. For example, the current COVID-19, to me, is a century-old cycle because the last big health crisis was actually the 1918 Spanish flu. So about 100 years later, we are COVID-19. All right. So in stock market, we have the 3.5-year stock market cycle, cyclical stock market cycle. We have the 17.5 to 21-year circular stock market cycle. So there are cycles, especially in financial market. All right. So that's why tonight I'm here to share you guys what I have researched about the cycles, about the US stock market, which in turn will impact the so-called, let's say, Malaysian market, or probably if some of you guys are Singaporean, may impact the Singapore market going forward. All right, so do take note, CA is something that we can do forecast. All right, and it's telling me that we are at the initial stage of the melt up, especially being led by Nasdaq. Nasdaq has broken into historical high, all right, and is leading the rest of the pack. All right, so now, and because of cycle analysis, on the 26th September 2016, I was interviewed in The Edge, and I forecasted that Dow Jones is going to hit to 30,000. At that point, I remember September 2016, this chart of Dow Jones, it was here. September 2016. So from 18,000, it actually went all the way up to, all right, over here, just before the COVID-19 caused a plunge in the so-called down zone. All right, so US stock market actually went up 64% before it plunged. Now it's back to where, almost back to where it is. Also, ladies and gentlemen, so no need in the age. Sorry, I am. Sorry, Shan, I can't scroll.
Oh.
Technical issue. Yeah.
Okay, no problem.
So what?
You can't go to next slide, is it?
Yes.
We are still seeing your mouse hovering here and there.
Oh, I can't go to
Yeah,
the next slide, even though. So what can I do?
Oh, would you want to reshare your screen to see whether it still works? You close your screen share and then try to share again to see if the technical glitch is addressed.
Sorry, come again. I close.
Maybe you off your screen share and then you turn it back on again to see if you can click to the next slide. Is it a PowerPoint issue?
No, it's not a PowerPoint because just now I didn't.
Oh, there's one attendee who suggests that use page up or page down to move. Thank you.
Yeah, no. Oh, okay.
Oh,
Now
yeah.
can I? Just now
Okay.
cannot. Probably some technical issue. So now you can see,
Okay.
right?
Yes, can see.
Yeah. Okay. So yeah. So that's what I forecasted. And in Singapore, I was interviewed in the Straits Times. All this. All right. Of course. Then early this year, on the 16th of April, we had a webinar together. So the title then is the US 11-year US stock bull market finally coming to an end. And during the webinar, if you guys join me then, or even Sean, you remember that I said no, the US stock market, the bull market is not coming to end yet. I give a very solid, I say a big no. All right, I say it's just a so-called a deep correction. After that, we are going to see the US stock market continue to rally. Also, probably now, ladies and gentlemen, so that was 16th of April. So come, let's take a look what has happened. Because during that period of time, the largest financial paper in the whole world says that this 11-year bull market is over. Then after that, within the same month, they say the bull market is back. So make the whole world very confused. But I probably am the very few, I can't say I'm the only one, very few who say that we are not in a bear market. We are just having a deep correction. So let's take a look what has happened. All right. So now this is down zone. So from a high of 29,568 on the 12th of February, it collapsed. Can you see? So the red circle here is where we had our so-called, that's around 16th of April, we had our webinar. I said this is just a deep correction. We are not going to a full-fledged bear market, and US stock market is going to continue to go up, which in fact it did. So until last night, from the 16th of April, Dow Zone is up 20.4%. All right, it is about 5.5% away from the high here, but I'm expecting this 29,568 to be broken, and Dow Zone is going to go beyond 30,000 and higher. All right, so this Dow Zone, let's look at S&P. Oh dear. How come I'm stuck again? Okay. So this S&P, ladies and gentlemen. Also, S&P did better than Dow Zone, as we can see. The red circle is where we had our last webinar, and since then S&P is up 24.3%. it has even overtaken the February high and break into historical high as of last night. All right, so let's look at the next one, which is Nasdaq. Wow, look at Nasdaq, ladies and gentlemen. So this is the old high over here, around 9,000 plus. So the red circle here was when we last had our webinar, and until last night, Nasdaq is up by 36.7%. It has broken way above the February high, and it has been going higher and higher and higher non-stop. Also, as we can see, ladies and gentlemen, so US stock market has been leading by the Nasdaq, followed by S&P. The next one, because Nasdaq and S&P have all broken the February high, finally Dow Jones is doing the catching up. All right, so this melt up has in fact started so-called leading by the Nasdaq. All right, so as you can see, so the US market, generally the Nasdaq as well as the S&P, has broken into historical high. Probably we look at some market in the region to have a view of how's the state of other market in this region. For example, Malaysia, if you look at it, we have a double top. We've broken down from a double top, and then KLC actually dropped quite badly because of COVID-19, but it also has been rebounded together with the US stock market. But probably now it has faced some resistance, as now have pulled back a little bit. But if we compare KLCI with a US market, we can see that US market is in fact leading the whole world. This Singapore STI, in fact, we have been going through a very big range. All right, in terms of indexes, we are not going anywhere. This is for Hong Kong. Hong Kong actually after 2016 has been going up, but unfortunately because of the trade war, because between US and China, it has pulled back. Of course, starting this year it was a COVID-19, and now is slowly recovering. Also, we can see that the US stock market is leading the whole world, and as long as US stock market does not crash, which I don't think is going to crash anytime soon, that means the world, be it the KLCI or Straits Times Index or even Hang Seng, we are not going to crash anytime soon. All right. So now, ladies and gentlemen, with that as a background, that's why I say I'm expecting a melt up. In fact, we are starting to see the melt up happening, especially in the Nasdaq, followed by S&P. All right. But before I go into a detail of the melt, I just want to say this again. The disclaimer again, whatever I share tonight is only my personal opinion, is only for education purpose only, is not a recommendation, is not any advice. All right, so what you guys should view it is as education, information. Then what you can do is you can then take the information, go and do more research and due diligence, then make an informed decision. That is the whole objective about tonight's webinar. All right. So now I know you all attend a lot of webinars, but I have to give you guys my definition of time frame. Anything less than 1 month is short term. Intermediate term is from 1 month to less than 1 year. Long term is from 1 year to less than 10 years, and ultra long term is 10 years or more. But for the sake of tonight's presentation, I will be talking more of a short term and intermediate term. All right, and probably a bit of a long term. I will not go into ultra long term. Also, do take note of this. All right. So now, ladies and gentlemen, now we need to understand why I think there's going to be a melt up. The reason I think is very important. Also, for me, there are two main reasons why I think we are starting to see a melt up, and it's going to go probably even higher going forward. All right. Now, ladies and gentlemen, this is a very interesting picture representing the US stock market and its economy. Look at the front, the US stock market, very nice and beautiful, right? But look at behind, is all broken. So the behind of the house is something we can refer to as probably the US economy. For example, the US, not only US economy, I think the global economy is not doing well. For example, the G2 Q2 of the US GDP dropped by 32%, and even Singapore, Malaysia, our second quarter also did not do well. All these things. Also, there's like what I say, there's actually a disconnection between the stock market, which is a Wall Street, and the real economy, and or the Main Street. All the economy data are very poor, and probably it's going to get worse. But somehow, especially the US stock market keep on going up. So this got a lot of analysts or even a lot of investors, they're very confused. How come it's like that? Isn't it economy poor, the data's poor, then the stock market should be bad? But instead, it's totally different. All right, so that's why I say probably what we learn in the so-called about economy knowledge in our schools or university, probably we need to throw it out, because a very important that's causing the US stock market to keep on going up is this, ladies and gentlemen, is because Federal Reserve, ladies and gentlemen, as of now, they are doing this thing called QE Unlimited. So after the 2008 global financial crisis, they did QE1, QE2, QE3, and this time around, because of COVID-19, they went into full drive. They did QE Unlimited, all right, and it's probably going to last until fourth quarter 2021, a total of 10.3 trillion. Ladies and gentlemen, basically, what is QE? QE stands for quantitative easing. That means basically simple term, printing of money. All right, and I believe it's not only the Federal Reserve is doing that. If you look at it, the balance, this is a balance sheet of Federal Reserve plus Bank of Japan plus ECB, the European Central Bank. Look at over here, 2020, because of COVID-19, their balance sheet has so-called went up so much. All right, more than 5 trillion USD. All right, so that's why, ladies and gentlemen, there is a lot of liquidity out there because so much money is being printed. And as you all know, once the money is printed, it will not disappear into a thin air. It got to go somewhere. All right, so where will it go? That can absorb these trillions of dollars, ladies and gentlemen. One of the place is the biggest and the deepest market in the whole world, which is the US stock market. For example, ladies and gentlemen, look at Apple. It just become a $2 trillion company. So already take some of the trillions away already. Can you see that? Also, so the thing I want to say is this, with so much money floating around, it got to go somewhere, and with the interest rate so low, it just doesn't make sense for us to put our money inside the bank. So people are looking for investment that can grow much higher than the pathetic interest in our bank. So one of the places they go is US stock market, and big institution on with a lot of money like sovereign fund. All right, they will probably go into a US stock market, invest into Apple's, invest into Amazon, invest into Microsoft. All right, so big international companies. All right, so that's why with all this flood of capital moving into the US stock market, that's pushing the US stock market even higher. A second important reason that I think that we're probably going to have a further melt up is we are having actually at the background, we are actually having a so-called imploding bond crisis. This bond crisis is getting bigger and bigger and bigger. The bubble is getting bigger and bigger and bigger. As we all know, the central bank, like Federal Reserve, Bank of Japan, and so-called ECB, they have been buying bonds. Like Federal Reserve, they have been buying their own US treasuries. They have been buying corporate bond, all the junk bond ETF. Bank of Japan, they have been doing that. ECB, they are doing that as well. So that's why, ladies and gentlemen, they are causing this bond bubble to get bigger and bigger and bigger. But I want to show this chart, the next chart. As of now, Federal Reserve has cut the interest rate to almost zero. All right, almost zero, and probably they will want to maintain it at zero. All right. But the thing I just want to say is this: they probably cannot do that for a long time because Federal Reserve can only so-called influence the short-term interest rate. They are not able to influence the long-term interest rate. Ultimately, the free market, all right, will force the interest rate to go up. Why do I say so? Because remember, I do cycle analysis. There's actually this high-grade corporation bond yield. Just to let you guys know, bond yield go opposite to bond prices. So when bond prices go up, bond yield will drop. Vice versa, when bond prices drop, bond yield will go up. So ladies and gentlemen, there's actually a 60-year high-grade corporation bond yield, 60-year. All right. As we can see from here, 1970 to 1970, 1740 until as of right now. All right. So there's this 60-year cycle. All right. This is the bond yield. It has been coming down and down and down and down, and probably is going to stay a bit lower because Federal Reserve probably not going to increase interest rate anytime soon. But I want to say, what I want to say is this: it's just a matter of time. This bond yield will start to turn up. Look over here, ladies and gentlemen. We're supposed to have a low in 1890, but the low actually came in 10 years later. So if history were to repeat itself, so the low should be in 2010, right? So if history were to repeat itself, another 10 year will be 2020. That's why I see probably next year or even 2022, we are going to see the bond yield going up. Remember, when bond yield go up, bond prices will drop. So that's why when this whole bubble will then burst, please understand this, ladies and gentlemen. The market cap of the global bond market is 10 times bigger than the market cap of the global stock market. Also, when the bond bubble bursts, capital will move out. They'll be selling from the bond market. Money, capital will be moving out. Just a small percentage of that capital for bond market, when it moves into a US stock market, it will push the US stock market even higher. Because like what I say, bond market is 10 times bigger than the global stock market. Also, that's why, ladies and gentlemen, I can tell you, with so much liquidity and with the imploding so-called the sovereign debt crisis or this bond bubble, later on when it implode, it will force even more capital out from a bond market, go into a US stock market, causing into probably like what I say, a shoot up. If you want me to give a so-called example, probably we may end up like what has happened to the glove stocks in Malaysia. Or we may end up in that kind of situation because too much of a liquidity rate moving into a stock market. All right. So now, after understanding why already, ladies and gentlemen, then I have to answer the question when. All right. Ladies and gentlemen, like what I mentioned, we are going to have a melt. We're starting to see it, and probably we are going to see go further higher. But do take note, September is a so-called a seasonal weak month in the US stock market. And later I'll show you guys my proprietary cycle chart is also showing probably a correction may be coming in the US stock market. I want to say again, it's a correction. It's not a crash. After this correction is over, then we'll see this melt up continue. All right, ladies and gentlemen, so this is Nasdaq. So probably we are going to see a pullback probably in September. Then after that, we will continue to see it go up higher. Like what I mentioned, Nasdaq is leading S&P, and S&P is leading the so-called down zone. All right. So now back to cycle analysis. I want to share something very interesting with you guys. There's actually a 3.5-year cyclical stock market cycle. All right. So as we can see here, every 3.5 years, as you can see in the blue circle, there's a turning point, so-called in the stock market. This is a down zone. 2008, of course, we have the global financial crisis, a very huge bear market. So another 3.5 year middle of a 2011, we have a so-called about 15% correction. Another 3.5 year, which is about 2015, we have one plus year of so-called consolidation before it go higher. So another 3.5 year, that's why around middle of 2015, 2018, all right, we have a correction. Of course, starting this year, we have this, to me, this is a health crisis. Pandemic, there's a COVID-19 is a health crisis that causes drop. That's why it recovered very quickly, because it's nothing to do with financial. All right. So once things start to business start to go back to normal, which we are starting to see, like restaurant going back, we are starting to see travel, at least let's say Malaysia domestically, you guys can fly domestically. So things are starting to recover. So that's why economically it is starting slowly to recover. Also, based on this 3.5 year cycle, ladies and gentlemen, from 2018, another 3.5 year, I'm looking at 2021, or if not 2022, we should have something like what we are going to happen over here in 2008. But before that so-called bear market come, we are going to have a melt up. Not only the 3.5 year cyclical stock market cycle, we actually have a circular stock market cycle, which is about 17.5 to 21 year. So it is also looking at around 2021 to 2022. All right, so that's why I say this melt up, if you ask me, all right, when probably is going to last till 2021, 2022. All right, before we go into a full-fledged bear market. All right, so this is my view. All right, and my definition of a bear market is this, because some of you guys will ask me, hey Derrick, then how do I know when a bear market will come? Because whenever there's a drop, a lot of analysts will start to say, oh, finally after 11 years, finally we are going to see the bear market coming. But after so many times, they say this, the US stock market keep on going up. All right, that's why, ladies and gentlemen, I think I shared this in my previous seminar webinar before. I say this, to know when a bear market is really coming, for me, my definition is this: we need to have a 20% decline in the US indexes from the top to the bottom. The second condition is we need to have a significant macro deterioration. Once these two so-called conditions is satisfied, then we will see the start of a much bigger decline, possibly a 30% or more decline in the US so-called stock market. All right, then some of you guys will ask me, so Derrick, what is your definition of significant macro deterioration? Then this I have to introduce my proprietary timing and yield relative risk index, which is actually this line over here. I'm going to very quickly say this, introduce this so that you guys will have some understanding what I'm talking about. This is my relative risk index in short form, RI. This black line here actually shows the risk level of the US stock market as compared for the last 21 years since 1999. This is a monthly data, RI. Also, this RI actually shows the risk level of the US stock market, not commodity, not currency, not bond market, is the risk level of the US stock market. Also, we have 4 color zones, which is green, yellow, orange, red. When we are in the red zone, that means what? Relatively, the US stock market is at a high risk level. Like right now, as of based on the closing price of July, all right, my RI level is at 75.62. We are in the red zone. All right, green zone means in technical term, that means is over so-called stall, but red zone means is probably high risk. High risk doesn't mean it's going to crash sooner, ladies and gentlemen. Then your question will be, Derrick, then when is it going to crash? Can you all see this line over here? This red horizontal line, which is a 60% mark. Let me so-called overlay my RI against the so-called S&P 500. All right, so can you all see? Let's look over here. My RI go into the red zone, which is high risk. Then it start to drop, right? Can you see S&P actually went through a 20% correction? My definition of significant macro deterioration means that means my R line actually break below this red color line. So can you see we have a 20% drop in the S&P, and we see my RI break below the 60% mark. Because of that, these two conditions, the US stock market went into a full pledge bear market, a drop of 50% and more. Let's look at 208. My RI went to red zone. It came down. Can you see S&P had a 20% correction? Then after my RI break below the 60% mark, the S&P went into a bear market. So can you see in 2015, my RI went to a red zone, but then can you see it came down and break below the 60, the red color so-called horizontal line. But the thing is over here, S&P did not have a 20% drop. So that's why in the end, we did not have a full-fledged bear market like 2008 and 2000, the Nasdaq bubble. Also, as of now, ladies and gentlemen, we can see that the RI as of now is in the red zone. It is still far away from my so-called this red horizontal line, which is 60% mark. Also, that's why I say this we're going to have a correction maybe in September. It's just a correction. After that, as the US stock market continue to melt up, later on, probably 2021, when the US stock market, for example, this case S&P start to have a 20% correction. At the same time, we start to see my RI start to, this black line will come down and break this red horizontal line. Once these two conditions satisfied, 20% drop in the index and my RI break below the 60% mark, then I will say we will probably end up with a bear market like in year 2000 and 2008. But at this point of time, I'm not seeing that happen. What I do see is based on cycle analysis. What I do see is I do see we're going to have a correction starting next month, probably leading into the so-called the US presidential election in November. Until then we should see the US stock market continue its melt up and go even higher. Or just to let you guys know, my RI, you don't see it's just a line like that. It combines technical analysis, cycle analysis, as well as fundamental analysis indicators, altogether 14 indicators. And within the 14 indicators, there are 47 sub-indicators. Also, I just present it in a very simple black line over here, but the thing is, they involve billions of data of crunching to go into this black line over here. Or just to let you guys know this. That's why this is a very powerful tool that I have. That next time, whenever I have any webinar with Kenanga clients, I will share this so that I will let you guys know, hey, is the RI starting to come down and break below the 60% or this red line here? If it is, and at the same time, if we see a 20% so-called drop in the US stock market, if these two conditions happen, then I will probably say, ladies and gentlemen, probably the bear market is coming soon or here already. So get prepared. All right, but ladies and gentlemen, at this point of the time, I'm not saying that. So don't get too worried. Even though going forward, we may continue to see poor economy data, which I think we may. Or in fact, based on cycle analysis, I do see that we may have a second wave in the so-called COVID-19. There may be another round of lockdown. Maybe, I'm just saying maybe. And this will impact the economy again, like what happened during the first lockdown. Also, all this probably is going to, this COVID-19 probably is not going to disappear very soon. If we based on history, like for example, 1918 Spanish flu, it actually lasted for 2 years. All right, and we have actually 3 waves then. Also, probably we are going into a second wave. All right, so do take note of that. All right, so now, ladies and gentlemen, so as of now, what I can say is this. All right, my RI is way above the 60% mark. Also, I don't see any crash coming soon, but I do see a correction coming soon. How do I know? This is my cycle charts. This is my dynamic cycle chart. I have to explain to you guys how to read my cycle chart. My cycle chart does not have y-axis. It only has x-axis. Remember what I told you? What is cycle analysis? Cycle analysis is about timing and turning point, remember? Because I use cycle chart, I can forecast timing and turning point. Also, what is my cycle chart telling me right now for the US stock market? For this case, this is actually for down zone. Also, I'm seeing a turning point. Okay, can we just look over here? This is for the month of August. August 01 means 1st of August. So 01 September means 1st of September. Can you see? Because my cycle chart is actually this red line over here. Because of my cycle chart, I can actually do forecast until October and even part of November. How is this cycle chart generated? Is I take decades or even 100 years of historical data, for example, down zone, plus the future market data of down zone. I take all these billions of data together, I put it inside a software, which will take about 45 minutes to crunch all the data using artificial intelligence and neural net technology. Then after 45 minutes, they will generate this so-called cycle chart. And remember, cycle chart is about turning point. So I see that there's a turning point in around end of August. And the next turning point probably for down zone is around end of September. That's why I say probably for the month of September, we may see some correction. All right, after that, maybe some hovering until the so-called 3rd of November so-called election. Then after that, be it is Donald Trump or is it Biden, no matter which who become the next US president, I do see that the US stock market is going to go higher from there. All right. In fact, I do think that based on my research and all the financial model that I run, I'm running a lot of models, is telling me that we're probably going to see a US stock market go into a melt up, a really melt up next year until it reach a high. Then finally the bubble burst and we'll go into a bear market. Also, this is when what I think will happen, or that means this bull market will happen probably until 2021, latest 2022. Then we will then enter into a bear market. All right. So then, ladies and gentlemen, so now you understand why there's going to be a melt up and when it's going to happen. Then the next question is, how can I benefit from this? This is very important. So the several way how we can benefit from this is, I want to say this again, ladies and gentlemen, these are not recommendation. What I'm just sharing is just information which you can find online yourself, but I'm just pointing you to the direction so that you can go and do more research on yourself. Also, if you want to participate in the US stock market, I want to say this again. If US stock market not going to crash, and after probably this consolidation is going to continue to go up, I think the global stock market, like for example KLCI, all right, probably is going to follow suit. That means it's not going to crash as well, unless a certain big event happen. All right, if not, most likely is going to follow the direction of the US stock market. Or same thing for Straits Times Index, same thing for Hong Kong market, or even China market itself. All right, so let's come back to the US market. So if you want to participate in the US market, to me, the simplest way is by, one of the way is through ETF, exchange traded fund. And if you feel that a Dow Zone is going to go higher, one of the ETF probably you can look at is actually this ETF called DIA, the symbol. The full name for the ETF is SPDR Dow Zone Industrial Average ETF. That means this will actually track Dow Zone. That means when Dow Zone go up, this DIA will actually go up. Or when Dow Zone, let's say tonight Dow Zone drop, this DIA will actually drop. Also, if you do not know how to do a fundamental analysis of individual stocks, or you don't know how to read the so-called the balance sheet, all these things. But if you believe that the US stock market is going to go up, if you believe, then one of the way to track the Dow Zone is actually this ETF for Dow Zone, DIA. And ladies and gentlemen, as of last night, it closed at 283.43 US dollar. That means it's 283.43. All right. I just want to let you guys know is this. Probably some of you guys may not have traded the US stocks. In US stock market, you can actually buy one share. Unlike in Singapore or Malaysia, one lot is maybe about 100 share or 10 share. All right, but in US market, you can actually buy one share. So if you buy one share of DIA is 283 times 4, probably is maybe about 1,000 ringgit. You can own a piece of Dow Zone. And ladies and gentlemen, you do not need to go far if you haven't traded US stock, because Kenanga actually Kentrade, they actually provide the platform whereby you guys can actually trade the US stocks. Also, you don't need to go anywhere to search for it. You are at the right place already. Also, if you haven't opened up a Kenanga account, please open one so that you can use it to trade the US stocks. All right, so if you want to so-called track Dow Zone, DIA probably is an ETF you can look at. If you want to ride on the rally in S&P, then probably you can look at SPY. SPY is actually SPDR S&P 500 ETF. That means this SPY ETF actually track the performance of S&P 500. Then if you are interested in the so-called the technology heavy index Nasdaq, there's actually an ETF called QQQ or QQQ. All right, it actually stands for Investco QQQ Trust Nasdaq. That means if you are bullish about, well, look at QQQ. It has been going up and up and up and up. Anyway, this just to let you guys know, this black line over here is the QQQ's 5-day moving average. This green line here is actually its 20-day moving average. This blue line here is actually its 50-day moving average, and this red line here is actually its 200-day moving average. The 5-day, because one trading week, there are 1 week there are 5 trading days, Monday to Friday, so this black line, which represents the 5-day moving average, is good for short term. This the green 20-day moving average, it represents actually 1 trading month. This blue 50-day, it actually represent 1 quarter. That means about 3 months. And this 200-day moving average, it actually represent about 1 year. We can see we just go back to look at the chart of Nasdaq, ladies and gentlemen. This is Nasdaq. Can you see Nasdaq has been going up and up and up and up. All right. That's why this QQQ, this ETF that trade Nasdaq, also has been going up and up and up. And it has been a very good friend with the 20-day moving average. So can you see? It follows this 20-day moving average very nicely. Also, if you feel that hey, you like technological sector, because why? Because probably they are beneficial of the COVID-19. For example, a lot of people start to work from home or still continue to work from home. So they use Zoom call or they use DocuSign or even Zoom, all this. Also, if you feel that all this is going to benefit from this pandemic, if you feel that technology sector is something that is going to benefit from all this, then maybe QQQ is something that you can do more research on. All right. Then maybe some of you guys will ask, well, Derrick, but I don't know how to look at all this moving average or how to draw the trend line, all these things. If you are not sure about technical analysis, don't worry. I'll be back again in October to do a technical analysis class, but for that is more on Malaysia stocks. But it's all right, ladies and gentlemen. As long as you learn the technical analysis, you can apply the knowledge to any market in the whole world. All right, but do take note, the October one is more on Malaysia stocks. All right, so these three I feel are the easiest way to participate in the rally of the US stock market. All right, for example, Dow Jones, it has 30 stocks. All right, of course, Apple is one of it, and but soon they are going to change some of the components. For example, Salesforce, CRM, is going to so-called replace one of the stock that's going to replace a stock inside. Can you imagine ExxonMobil, the oil company, which has been in Dow Jones since 1928. All right, it's going to be removed and it's going to be replaced by Salesforce. That's why we can start to see that probably Dow Jones is going to be have more concentration of tech flavor as well. Also, if you want to participate in the US market, I feel the easiest way probably you can look at to participate is through DIA, SPY if you're interested in the S&P 500, and QQQ. All right, I just want to say this again. DIA, SPY, and QQQ are all available in Kentrade or Kenanga trading platform. You don't need to go anywhere else already. Or you are at the right place, or you just need to open an account and you can start to trade US stocks. All right. Then for those of you guys who are more adventurous, my take is this, because like the title of this webinar says, we are probably into the final leg of the US bull market. Final leg already, because probably going to end by 2021. That means at this point of time, the correct mindset to trade the market should be buy high, sell higher, because we are in the last leg already, ladies and gentlemen. All right, this bull market has started since 2009 March, 11 years already. 11 years. I can tell you this is the longest and the most hated US bull market in history. 11 years. Also, the thing is this, so to me, this US bull market is like a marathon. You imagine, you run a marathon, probably you are left with maybe 400 meters. We are like now living with 400 meters more to go. Most likely, the last 400 meters, you go for your best and try to clear it in as short a time as possible, correct? You will not be taking your own sweet time, correct or not? That's why when you apply this into stock market, at this point of time, we should be buying high and sell higher. We should not be trying to catch bottom. Catching bottom should be at the tail end of the bear market or the beginning of the bull market. But now we are almost at the tail end of the bull market already. Also, that's why we should be buying high and sell higher. So probably I'm going to talk about two stocks, but I want to say this again, they are not recommendation, but I'm just showing you guys what category of stock or trading strategy that you can look at so that you can participate in this last bull run. For example, there's this stock called Amazon. Or we can see that it's an uptrending stock. And it has a display what we call a ascending triangle, which is a technical analysis chart pattern. And last night, it has actually broke up and go even higher. So what I'm trying to tell you is this: we should be choosing stock like that. That means uptrending, breaking new high. We should not be buying a stock that's downtrending. Example like what? Probably because of COVID-19, unfortunately, maybe airline stocks probably may not do well. All right, so those stocks, that's why you look at them, probably they are downtrending with the once a wild bounce. But my take is because we are in the last leg of this bull market already, so what we should do is we should buy into strength. And ladies and gentlemen, and because Amazon has great strength, the boss is actually now worth more than 200 billion US dollar because the share price keep on going up. Can you see that? All right. So this is, I'm just giving you an example. Another example of a stock that probably you should look at the trend, it should be uptrending, is this something like this, Microsoft. Or this big drop here is because of the COVID-19. But can you see after that, since March, it has been trending up and up and up and up, going higher. And probably around after early July, it gone through a consolidation, probably form a double bottom. And last night, it actually broke up, and with a broke up in a double bottom, and with the moving average all turning up, this is bullish. We probably will see so-called Microsoft go higher from here. Also, ladies and gentlemen, interestingly, can you see the richest man in the whole world is the boss of Amazon. Second richest man is the boss of Microsoft, Bill Gates. And one share of Microsoft is about 221. All right, so times 4, probably you are looking at maybe 900 ringgit. You can own the business of the second richest man in the whole world. All right, so this is what I can share is this. This is probably the strategy that we should take right now, buy into uptrending stock. But I just want to say this again, it doesn't mean, what, tonight you see this, what, Amazon, Microsoft, Derrick say this, you quickly go and buy. No, no. All right, probably you are a bit late already because you're already broken up. So that's why I say when it's broke up, you should be in already. Probably you are a bit late. But you say, Derrick, I don't know how to do all this. Don't worry. That's why I say, if you can join us for my technical analysis webinar class in October. All right, I will teach all this, and you can. I will use the so-called Malaysia stock as example, so that you guys can apply it in a Malaysia stock as well. All right. Also, so this is what I can share, the how part to participate in the US stock market, be it ETF or be it individual stock. Like what I say, even though individual stock, you still can buy one share, or you can buy one single share in the US stock market. So for this case, it's about 900 ringgit. You can own a piece of a business of Microsoft. All right. And later on, I do foresee that the US stock market and the US dollar is going to rally. So you think about it, once you make money from, let's say, example, Microsoft, you have a profit, of course, with your capital, then you convert back to ringgit because of a US dollar rally. You actually make another currency gain. Can you see that? Also, that's why, ladies and gentlemen, so probably US stock market is somewhere probably you should look at to participate in, all right, to ride on this melt up. But I want to emphasize again, it doesn't mean straight away go and buy, because I do see that we may have a correction coming soon based on my cycle chart that does a forecast. Or in fact, right now, for me, I myself, I'm slowly lightening up my process, my stocks. For example, last night, I actually have a sales force which went up about almost 30%. So I'm taking profit. I'm slowly lightening up, also to prepare for this correction. But what tonight I'm showing you guys is this is I just want to say we going to have a melt up, but temporarily in September or even October, we may have some correction heading into the election. But after that, ladies and gentlemen, we will continue to see the melt up, and we'll probably see down zone going to break the 30,000, S&P go higher, and Nasdaq going even higher after probably a so-called a correction in so-called September and October. Also, for the record, ladies and gentlemen, I want to say this. So probably after the correction is over, this is my forecast. In fact, I forecasted this down zone 30,000, right? I can tell you this. Down zone later on will go above 30,000 and go even higher. All right. Then for S&P, we are going to head towards the 4,000 mark. And for Nasdaq, we are heading to 12,000. We are starting to see the initial stage of the melt up already. But later on, probably after the US election and heading into 2021, we should really see a sharp rally for the US stock market. Also, basically, the US stock market, even though we may have a lot of going forward, we may have a lot of negative economy data. Remember this picture? The economy is shattered, but it is still going to go strong. Why? Because of so much liquidity. The money got to go somewhere. And one of the places that it will go is actually so-called US stock market. Of course, another place will be gold and silver. That's why nowadays we start to see gold and silver price going up. It has, for example, gold price has even break above 2,000. Or go as high as almost 2,100. Or because of so much liquidity. And later on, when this bond bubble bursts, more money is going to come out from the bond market, and you will go into a US stock market, pushing it even higher. That's why I say there's going to be a melt up. All right. Also, ladies and gentlemen, so I've shared with you guys where I think the market is going to head going forward. All right, and probably now we can have some Q&A to answer some of the questions that you guys have. I think that's more important. So probably I'll hand the time back to Shane so that we can do some Q&A. Back to you, Shane.
Thank you so much, Derrick, for your insightful sharing and also sharing your perspective of the state of the US market right now in terms of when, how, why is causing this happening. So right now, if you have any questions to ask our speaker tonight, please write in the Q&A box. And I already seen like easily 15 questions on my screen right now. Wow. So yes, I will just, of course, in the interest of time, we cannot cover all questions. So so we'll just pick a few one. Okay, now Derrick, is it wise that we keep the cash right now and wait for the economic downturn in 2021 to 2022? Because if we invest in the market right now, we might get stuck by then and having less cash to buy equities on a lower price during the economic downturn. This from Beng Hua.
For Peng Hua, I can't advise you what to do. I really cannot advise you. Probably if you need professional advice, you should look for a professional financial advisor or a planner. I can only share my point of view. My point of view is this. I do believe that we are going to have a melt up, and we are starting to see already. Like, let's look at the chart of let's say Nasdaq is breaking up, going to historical high. S&P also break the historical high, go even higher. The laggard is still down zone. So I do see that all this is going to happen. So that's why for me, even though I'm a Singaporean, sadly, you look at the state of the STI is like that. So I frankly do not have any. Okay, I have one ETF in Singapore. It's called GLD, which is actually a gold ETF. Apart from that, I do not have any US Singapore stock, even though I'm a Singaporean. Most of my money is into US stocks. Also, for me, I do believe that we are going to have a melt up. That's why I've been in the US stock market. But because remember, I do see that a correction is coming. So that's why I remember I mentioned earlier, I'm slowly lightening up my position. Also, until when? Probably until September, October. As long as my RI does not break down below the red color horizontal line, together with a 20% drop in the so-called US indexes, unless these two conditions never happen, then we are not going into a bear market. That means for me, I will still be invested in the stock market until probably when my RI start to turn down, break below this horizontal line, and we see a 20% drop in the US stock market, then I will probably say that maybe a full-fledged bear market like this and like this is going to be here already. If not, for me, I can only say I will still participate in the US stock market. Of course, not only US stock market, actually I'll participate in the gold and silver. Ladies and gentlemen, I just want to share this. From now until 2024, we are actually going through a commodity bull run until 2024. That's why I say, remember, Federal Reserve, they cannot hold on to this low interest rate for too long because inflation is going to come back because of the shortage in commodities. When inflation come back, ladies and gentlemen, this is what we're going to face because some of you guys probably are still young. You can go back and do your research around 70s and 80s. We have very high inflation. Also, that's why the Federal Reserve increased interest rate. The federal rate went up to almost 15%. Now it's almost zero. It was 15% then because the inflation was very high. So that's why I say inflation is going to come back with the commodity bull run until 2024. That's why Federal Reserve will not be able to keep the interest rate low for long. Remember what I say, they can only keep the short-term interest rate low. They cannot influence the long-term interest rate. Even though they influence the short-term interest rate, they cannot fight the free market because a commodity bull market is coming back and inflation is going to pick up. Also, that's why another sector probably you guys can look at, like what I do is gold and silver. All right, this is where I think the capital will flow into to cause the US stock market to go up or even the gold and silver price to go up. Gold and silver, same thing, is going through a pullback right now. But we have seen the rally already. So, but it cannot keep on rallying in one line, straight line up. So it is pulling back, taking a rest. Later on, you will then go further up again. All right. So this is my answer to the first question. Back to you, Shan.
Okay. Thank you, Derrick. In relations to the RI index that you show, there is questions by Lilian, who asked that why is it in 2016 and 2017 when RI went below the 60% mark, the US indices do not fall like in the previous 2 cycles?
No, like what I say, my RI is based on 40% cycle analysis factors, 30% technical analysis factors, and another 30% fundamental factors. So this is not a purely 100% technical indicator. I already mentioned my RI is made up of 14 major TA, CA plus FA indicators. And within the 14, there are 47 sub-indicators. Like what? I look at oil price. I look at the US Treasury yield. I look at the housing number, 47 indicators. Also, then I realized, like what I say, when I overlay my RI against the so-called US stock chart, for this case S&P, I see that whenever it crossed this rate 60% mark with a 20% drop at the same time in the US stock market, it will result in a 50% full-fledged bear market. Same thing, it go into red zone, come down, break the red color line. At the same time, satisfy the 20% drop in the US stock market, it resulted in a full-fledged bear market. So in 2015, it went to red zone, yes. It came down. It did break the 60% mark, but the US stock market only went through a 15% correction. It did not satisfy the 20%. So that's why we never go into a full-fledged bear market like here. Ladies and gentlemen, look over here. Because of COVID-19, S&P actually so-called plunged 30%, more than the 20% correction condition that I mentioned. But can you see, my RI did not break below the red horizontal line because I need these two conditions to satisfy together. 20% drop in the US indexes together with the break of the so-called the 60% mark. But with COVID-19, yes, S&P dropped more than 20%, but my RI did not break the red line over here. That's why during COVID-19, a lot of analysts, or a lot of broking house, a lot of even Wall Street Journal, they say we're in a bear market. I say no, we are not in a bear market. We are just having a deep correction. Why am I so confident to say that it's just a deep correction? After that, we are going to rebound because my RI never break below this 60% mark. Also, I hope I answered the question. Also, going forward, watch out for this, my RI, whenever I come back. Anyway, this tool is only available to my Timing and You members, but because whenever I come back to Kenanga to do webinars, to give talks, I will always share my RI to keep you updated. So once it breaks the 60% mark, and once we have a 20% correction, I will let you all know already. Then maybe the bear market is here, but we are not there yet because my RI is still in the red zone going up. All right. So back to you, Shane.
All right, so you've commented on the US indices. You talk about gold and silver. How do you see oil price faring in this US bull melt up? This is by Katirasan.
He's asking my view about the oil price, is it?
Oil price, yeah, correct.
Like what I say, we are going through a so-called commodity bull market. Oil is also a commodity. Also, I don't have a chart tonight, but the thing is, oil price, I believe, reached a low, if you guys remember, during the COVID-19. It has rebounded strongly. Then it's sort of like hover around, I'm talking about WTI, it's about 40, 41, 42, over around there. Probably we'll have a bit of pullback, but after that, I do see oil price continue to go up from there, all right, going higher. probably go back to $60 to $70 at least level, because we are in a commodity bull run already. I'm not expecting oil price to collapse back to the strong support at $10. I don't see that happen, right? But I do see a correction probably coming. I do see that. Then after that, we'll see oil price continue rally from there. All right, Ken?
Okay. Now this question is from Hannah. The question is, if Trump wins, will he push up the market like what he did last time and avoid a crash, or a crash is inevitable no matter which candidate wins?
All I can say is, from now until 3rd of November, Donald Trump, he will try all his ways and mean tweet lah, force Jerome Powell lah. He will do anything. And do you read his tweet? I think yesterday he said, or even before that, he said, if Biden win, US stock market will crash. He tried to threaten people. Also, my take is this: he's now the president. He will make sure before the US presidential election, US stock market will never crash. Also, then we go through the election. It's either Donald Trump win or Biden win. It seems that based on the poll, Biden is leading. But my take is this: in 2016, Hillary also leading. But in the end, you see what happened. Also, I still can, for me, I still I'm not 100% convinced that Biden will win. I still think that Donald Trump will have a chance of winning it. But regardless, Donald Trump win or lose, ladies and gentlemen, the liquidity of, like what I mentioned, so much liquidity out there. And with the burst of the bomb bubble, more money will go into the US stock market. So regardless, Donald Trump win or lose, our US stock market will still continue to go up, because institution, people, they are finding a place to park their money. Because do you want to park your money in a bank whereby the interest rate is so low? They want to park in places whereby probably they have some form of income, or they can enjoy capital appreciation. Do you all know Warren Buffett has always been very against gold, because they say gold is just a piece of metal, doesn't produce dividend, doesn't produce any product. But in the end, recently, do you know he bought into a gold mining stock called Derrick Gold? Also, that's why, ladies and gentlemen, what I can say is this is, no matter Donald Trump win or lose, because of so much liquidity, big institution or even individual, they are trying to place a place to park their capital, because they don't want to park inside their bank. So where is a place that is so deep, so big, that can accept trillions of dollars? US stock market, especially Dow Zone, whereby we have all the large multinational company over there. Also, that's why I say Dow Zone is definitely going to do a catch up. Dow Zone to me is definitely going to break above 30,000. It's only how high above 30,000. And S&P is going towards 4,000, and Nasdaq is going towards 12,000. Nasdaq, we are almost 11,600 plus already. So we are almost there already, ladies and gentlemen. I mean, about 300 plus points. Also, regardless, Donald Trump win or lose, we will still see US stock market do a melt up until probably we see a high in 2021. Then probably we'll go through a bear market like what happened in 2008 or 2001. So this is my view about this question. All right, back to you.
Okay, so
yeah.
Just now you mentioned about maybe September or perhaps October will have some kind of the cycle turn event. So what do you think the magnitude of the correction is likely to be? So this is from David.
Probably minimally maybe 5%, 10%. It will not be another 30% or 40%. It will not be. All right, first, because Donald Trump would not allow it to happen. All right, COVID-19 he cannot help because it's a health crisis, it's a pandemic. He cannot help. But in a way, he forced Jerome Powell to do what? To pump in a lot of money. Can you see? Also, to me, is probably we are looking at maybe 5 or 10%, at most 15%. I don't think it will go to 20%. It will definitely not crash. Ladies and gentlemen, I want to say this. This is SM. This is, for example, Nasdaq, right? Nasdaq is like going through a so-called blow off. That means sort of like going up very strongly. Now, price level is not is secondary. The important is timing, and the timing is telling me is probably, remember when, under the when, I say probably 2021, 2022. So that's why I say we probably still have one more last leg up, and probably is going to be a very strong leg up. All right. So, and a lot of people will be scratching their head. Wow, the economy data so bad. We haven't found a vaccine for COVID-19. How come the US stock market keep on going up? Yeah. So that's why I say whatever we learn from our economy class in in school, probably all those textbooks probably have to throw away. I think probably a lot of economy lecturers also start to scratch our head. Whatever they teach doesn't tally with the real life. Also, that's why I say it's going to be very confusing. Also, the best way to me is the best way is, for me, I use my RI because this is data driven. It's not based on my personal opinion, because I input thousands and billions of data into my RI, then I generate this line. Or because personal opinion is always wrong one. If I look at the indicators in the economy indicators with the Q2 result, GDP also bad, I wouldn't dare to be in the stock market. But I'm letting data-driven, let's say RI, or even my cycle chart to tell me when is a turning point. Also, this is nothing to do with personal opinion, because it's always wrong. It's all based on data driven. All right. Also, back to you.
Okay,
Shane?
so
Yeah.
there's just now you mentioned that there were a plenty of liquidity in the market, and when the bond market bursts, do you think that the cryptocurrency will benefit? This is from Keith.
Okay. In terms of cryptocurrency, for example, we look at the granddaddy of cryptocurrency, which is Bitcoin. Actually, Bitcoin had a halving. It started halving on the 11th of May. So normally, if you look at the two past halving, the first one and second one, after the halving, crypto has a big run. Or to a lot of millennials or even young people, they treat crypto like probably digital gold. So if you ask me, I cannot tell you what to do. I can only say what I do with my own money, okay? I do have Bitcoin, and recently I buy more Bitcoin, because I do see that if history were to repeat itself, because after first halving and second halving, Bitcoin actually went up a lot, and we just had a halving on the 11th of May. Well, so the low was around 5,000, so now it's about 11,400 to 500. So if history were to repeat itself, we may see Bitcoin go higher. I want to say again, if history were to repeat itself. But to me, the amount of money I put into Bitcoin is very, very little, probably 1% of my total portfolio. To me, I treat cryptocurrency like buying 4D or Toto. You know the feeling of buying 4D or Toto? That means you go and buy $1. If hit the first price, good. If don't hit the first price, you just tear the paper away, right? Yeah. So this is how I treat crypto. If it goes up, let's say go up to the old high of 20,000, then good lah. Go higher, lucky better. If it doesn't, fine with me because it's only 1% of my portfolio. I will not, Malaysia term is called sailang. I will not sailang into crypto because to me, it's too volatile for my liking already. All right, so it's only occupy a very small percentage of my portfolio. All right, back to you, Shane.
Okay.
Yeah.
The next question is on your RRI index. So how far has it been back tested, and also how far have you also back tested 20% drop against your RRI method?
Since 1999, for the last 21 years.
Okay, have
All
been
right,
back
because
tested.
all the component, because I have 47 component, some of the component, the latest, I mean the furthest I can go is only 21 years. Some I have 50 years, some I have longer, but some I have at most 21 years. So based on the 47 component, the max I can go is only 21 years. But at least it gone through 2 cycles of bear. All right, so I won't say is a very good representative of the risk level, but I think it's good enough based on whatever data that is available in the market. That's what I can say. All right.
Okay. Well, we actually overshot the time for quite a bit. Just let's do one more questions, which I find
Yes.
pretty interesting. So the question is from Chong. Why is there a cycle at the first place? Could it be that you are just fitting the curve?
Could it be what?
You are just fitting the curve.
No, cycle, not only in financial market, cycle is everywhere. Like let's say right now is nighttime. Then after that will be daytime. We have cycles in season, spring, autumn, summer, winter. So cycles are everywhere. Even human being, we are born, we grow up, we mature, finally we die. So it's everywhere. That's why it's only natural. It's only natural that cycle will appear in the financial market, and that's why, in terms of if you have done enough research, in terms of cycle for cyclical stock market cycle, there's actually a 3.5 years. I just named two, 3.5 year and 17.5 to 21 year. There's another one which I never mentioned is a 30-month stock market cycle. All right, it actually started so-called April this year. You add another 30 months, that's why I say probably we are going to see a low in 2020. So there are cycles. For example, gold reached a high in 1980, $850. Then it went through a 20-year bear cycle until it reached $250 year 2000. Then from 250, it turned into an up cycle until now, at least until 2011, it reached 1923. Then recently, it break above 1923, go beyond 2000. So everything that cycle, or if some of the participants out there, if you are down, be it in your relationship, in your work, all this, you are down in your cycle, don't give up, because ultimately you will bounce, because after a down cycle will be up cycle already. You just need to hang on. This is what I can share. All right.
Okay, very motivational. Derrick, is there anything else you want to share with us?
Okay, so I think before we end, I hope you guys have learned something tonight. Actually, tonight, especially for Kenanga clients, all right, I just finished a new ebook. Is how high will Dow Zone rally before this aging US bull market is finally over? Remember, I say 30,000. Or in this ebook, I will give you even more details. Actually, I'm offering this free ebook. You guys are the first batch because I just finished this ebook. Also, what you guys can do is you can go to this link, timingandyou.com, download /ebook. It's free. download this ebook. I'll give you guys a calculation, a detailed calculation where I already mentioned. I think Dow Jones is going to go beyond 30,000. How high I think it will go is all in this ebook. Also, please go and download this ebook to have a better understanding. And I think Shen is going to share it in the chat box also, right?
Yes, I already put it in the chat box.
Okay.
So you
y'all
can
go and go and download. All right. It will be something very interesting. All right. So apart from that, if you find that my sharing is good, we can keep in touch in Facebook. You can look for Derrick Tan, DERICATAN. Look for my page, or you can add me in my personal account. The best is look for my page because why? Because I have a gold and silver picture here. Also, every time you go and see, as long as my gold and silver picture is there, that means I'm still holding on to my physical gold and silver. One fine day, if you find that, hey, Derrick, this picture changed to other picture, no more gold and silver, probably I'm giving you a hint. I already sold off my gold and silver already. Okay. Also, please go and like my page. And finally, if you want to keep in touch, because I will share about more turning point probably in the social media, you can like my company's Facebook page, timingandyou.com, so that, for example, the next time we have a webinar with Kenanga, which is in October, which is about technical analysis, or you'll be updated here, of course, in Kenanga website and Kenanga Facebook as well. All right, so we can keep in touch in all this, but the most important thing I just want to finish off is this, ladies and gentlemen. If you believe that US stock market is going to continue to go up, and if you want to participate in all these ETF or stocks, there's only one place you can go, and this you are actually in it, which is a Kentrade. Go to Kenanga, open up a trading account, and you can start to trade US stock market and hopefully to enjoy the melt up. All right, so I think we have come to the end of my sharing. Please keep in touch, and as usual, at the end of my sharing, may the timing be with all of you guys. All right, so thank you very much. Back to you, Shane.
Thank you so much, Derrick, for your insightful sharing and also your perspective in the US market right now. So let me take back my presenter control to share with you what is our next webinar. Okay, now just now I believe that we have gone to a very insightful webinar, but we have more for you, okay, by Kenanga. So the next Kenanga webinar is titled "The Worst is Over or More to Come." All right, pretty interesting title, isn't it? So it's happening on 8th of September 2020 by Mr. Ui Kok Hua from 8:30 to 9:45 p.m. The registration link is already put in the chat box, so you can go to the chat box and click to register for this session. The link is already in the chat box. If you want to hear his perspective on the on the economy, state of the economy, and also the state of the stock market, please register for this session. And for those of you who have not had a trading account and want to sign one with Kenanga, okay, please follow this link, www.kentrade.com/open-account-form to fill in your details, and the friendly dealers will reach out to you to complete your account opening by Kenanga. So if you already have a trading account and you wish to have one more, then you can also fill in your details in this form, and the friendly dealer representative will reach out to you to get your to help you to complete your account opening. All right, so I already put all the links for the ebook and our next webinar registration link, as well as the account opening form here in the chat group. Please go there and click on the link to for those that interest you. All right, with that, I want to thank everyone for tuning in to this webinar this evening. I want to thank Derrick for spending your time with us tonight to talk about the state of the US market right now, and hope that you all have learned enormously like what I do this evening, and wish all of you here the pleasant rest of the day. Bye bye. This is Shen Chu.
Bye bye.
Signing off.
Bye. Yes.